What's going on, guys? D. Anthony here with Evolution Traders. In this video, we're actually going to talk about a trade plan that you guys can start implementing, especially in these markets. Now, again, it's rollover week. We have FOMC tomorrow. Markets have been extremely choppy. I don't know if you guys listened to the stream today that I posted or I was on, but wasn't the best trade action, especially early in the morning. And again, I'm speaking to everyone who maybe is new to the prop firm game, is new to trading futures, or maybe, haven't been around the markets all that long. We go through a few pockets, right? A few areas in the market where price action can kind of dry up. Price action can have big ranges where we're not really breaking out, we're not really breaking down. Again, all in all, if you look at a daily time frame, yeah, does the daily look great? No, but the daily chart on the NASDAQ is still over the 5, 10, 20, 50, 200-day moving average. So the bulls are definitely still in control, but you're going to get some of this action where you're like in limbo. You're like in distribution. Why? We're waiting for some things to happen. What are we waiting for? FOMC. What are we waiting for? Let's get through the contract rollover, okay? Many of us have already switched to the December contracts. I switched yesterday. A lot of you guys are starting to switch as well. But one thing that I want you guys to kind of understand is that regardless of your level of experience, let me save you a lot of time and let me save you a lot of headaches. Look for 1-2 good trades in the market, okay? And be happy. And the reason why I say that is even if you take maybe not even the best A+ setup, maybe it's a B+, B-, B-, C+ setup, and you make a little money on it, consider stopping out on the day, okay? The reason being is the more time you give yourselves to be in this business, the more time you give yourselves to watch price action, the better off you're going to be. It's very easy to look at what's on the screen here. What is that? 17 trades, $3,100 gross profit, 2 losing trades, and say, man, if I could just do that every single day, I'll be completely happy. I'll be able to retire in 6 months. I'll be able to retire in a year. Guys, that's an evaluation account. We trade evaluation accounts very aggressively. My funded account today, I did just about 191 bucks and I called it a day. Okay. There's a big difference in the way you trade evaluation, AKA funny money, to the way you trade funded accounts, AKA funny money, but potential to take out real cold hard cash that you can actually use and utilize and put into your pocket. And the reason why I say that is I don't care if you have a strategy that hits it 90% of the time. What happens when that 10% of the time where you're wrong, you can't control yourself, you overtrade and blow up an account? So you can win 9 days back to back to back and take one losing day and give it all back. And that tends to be what happens to a lot of traders. They have 1, 2, 3, 4 good days in the market. They have 1, 2, 3 good trades. And then they hit that red trade. And they hit that red day. And they don't know how to stop. I'm here to tell you that you need trading buddies, you need a coach, you need a mentor, you need friends, you need someone to hold you accountable. Someone to hold you accountable. Because if you have a hard time doing it on your own, the best thing you can do is get that tap on the shoulder and say, hey, you had a good trade, you had a good couple days. Hey, price action's not the best. I know you're seeing the same thing I'm seeing. So instead of pushing our foot to the gas, maybe we pull back a little bit. Because remember, the market's not going anywhere. It's not going to, disappear tomorrow. It's going to be here next week, next month, next quarter, next year. All we have to do is continue to stay in the game. And if I show you guys I'll show you guys 2 setups here based on my strategy that actually were a little nerve-wracking in the beginning of the day that ended up working out, and why I actually stopped at $191, $181 on the day. This first trade setup, I was a little bit anxious. Normally, I don't like trading that first setup off the bell, but the momentum on this downwards candle was so strong that, again, I'm a trader, I'm a human. I had that intuition that we could be going lower. Why? We lost a 20-day moving average. We have room all the way down to the 200. It did, in fact, come down here, but it put us in almost 22 points worth of drawdown at one point in time, okay? And at this point in time, I was looking for a little bit of a bigger price target. So on the initial confirmation of this 20 SMA play, I did go into the money, I did go profitable, and I was waiting for that bigger price target. And then I seen a big reversal, a big, bounce back against me where I was down now suddenly from green to down 15 points, 16 points, 17 points, 20 points. And I'm just kind of sitting there and I'm thinking, come on, like I should have known better, should have not entered right off the bell. Why did I do that? Stayed a little bit patient, trusted my rules. We never closed over the 20 SMA. That's, Confluence. We never took out, obviously, the reason why that's Confluence. Although, I didn't want to sit through a 60-point drawdown by any stretch of the means, but I had to kind of sit there and be patient and force myself to see the trade through. Luckily, I was able to just scratch off 10 points. Now, I could have made a lot more money, but at that point in time, mentally, I was already taxed. I'm already out of it. So let me bring up a scenario. Let's say you do get into that trade, and let's say you do hold through that pullback, and then you do take 10 points. If you're trading 5 micro contracts, okay, you're making around $20. You're making around $20 for every micro contract that you traded. So that's $100 trade. What's wrong with chopping it up and coming back tomorrow on a $100 trade, right? If you were trading one mini contract, you're upwards of $200. Okay, so you're upwards of $200 on this one particular trade. Now, this first trade of the day, I was able to hold it that long and sit through that drawdown because I only had 5 micro contracts on there. So I made around $100 after it was all said and done. But I also know that there were people that had a tighter stop loss. And those people with a tighter stop loss actually got stopped out of this trade when in fact it would have been a winner. So what I want you guys to start to identify right now is if you're going to trade and take setups within the first 30 minutes, do yourself a favor and just trade micros. Okay, you can trade minis, but trade them after the initial opening range of, the initial dust, right? Let the dust settle. I also looked at this long play here. Now, this could have just been a washout. At the time, we didn't know that the market was going to chop all day, but if you look at the close back over the 20 SMA, that price is sitting at 19,802. Once it confirms, it goes up to 19,808. Okay, so literally 5.5, 6 points, and then immediately gets rejected. What happens if you're a trader that was looking for 10 points? You lost 20 points. You lost 5 points. You barely made money, right? So in this particular scenario, how do you handle yourself? Do you want to potentially take a 20, 30 point loss on one mini contract? Do you want to be down $200, $300, $400 20 minutes after the open? Or would you rather take $100 loss, $150 loss with still time left in the day to battle back? That's what I mean. Off the open, it's probably better to trade micro contracts. Okay. Now, again, I'm not forcing anyone. I'm not grabbing you by the ear and saying you cannot trade minis, but do yourself a favor until you start taking some payouts. Make it a point, make it a goal. Until I take 2 or 3 payouts from these prop firms, I'm only going to trade micros. Okay. If you look at this particular trade here, again, this one doesn't confirm or pay out any more than 5 points. So it's at this point in time here, right? Because again, let me tell you guys how I operate. This first trade here, I was in some drawdown. I was able to take out 10 points. I stopped trading that account. I move over to another account. Okay. My second trade of the day, I was looking for those 10 points again. I took a full stop loss of 25 points. It was a $250 loser on that second funded account. I've got to put that account to the side. I'm not even going to trade it anymore. Okay. Now I'm starting to notice we're not really following through on these plays off the open. We're getting 5 points here, barely 10 points here. This next trade here does confirm, again, also puts you in drawdown. At one point in time, you were in drawdown from 19,746 all the way up to 19,760. So you're in about 15, 16 points worth of drawdown here again. And yet it happens to me yet again. So I get into this trade. I start to make a little money. I'm looking for that 10 points, maybe get 15 points, maybe get 20 points. Hey, the market's starting to get going here. And immediately I get thrown right back into drawdown 10, 12, 13 points. And then it comes back and it starts to pay me another 10 points. So immediately I start to think to myself, I cannot try to shoot for this 10, 15, 20 points. Not on a day like today, not on a day before FOMC, not on rollover week. I've got to go back to my bread and butter. I've got to go back to what works and what's less stressful. Let's increase the size a little bit. I decided I'm not going to trade any more funded accounts. We took around $100 here. We took around $100 there. After everything's said and done, we're at about $190, okay? And on this account here, the second account that I traded of the day, it's down $250. So all in all, okay, all in all, I'm down technically on the day, but I'm green in 2 accounts. See how that makes sense? This is also another reason why copy trading multiple accounts can be detrimental. It can be a downside because you can tend to chop yourself up across all accounts versus just 1 or 2. So with that being said, let me go ahead here and kind of speak to you guys that if you kind of rotate those accounts around and you play those micros, you're going to allow time to pass, and you're also going to start to see how the market is shaping up. And at this point in time, I start to notice that the market is shaping up in a manner where I'm just going to go back to trading evaluations today because I do not want to risk funded account capital. And I'm going to look for 5 points, and I'm going to take those scalps on anywhere between 1, 2, or 3 mini contracts. Okay. So you can see the next setup happens here, and I don't need to go through all of them. Those of you guys who were on the stream today, you guys heard me talk about the setups enough and seen me take the trades enough, but I'll just give you this one here. If you look at the 19,795, it does confirm, it does go back into drawdown, but before it goes back into drawdown, it does shoot for the 5 points. So from 19,795 goes all the way up to 19,813. Now again, it goes up over 10 points, but at this point in time, I'm not even looking for the 10 points. Okay, I'm just going to take 5 points here, 5 points there, 5 points here, 5 points there, 5 points here, 5 points there. And when I'm trading evaluations, I'm running a big trade count. So you're going to see my trades get up 10, 15, 20 trades sometimes. When I'm trading, 1 and 2 mini contracts, I'm putting a hard mental stop loss at around anywhere between $150 and $250, $300. And I'm just looking to make $100, $200 depending on how many contracts I'm trading. Obviously, if I'm trading 4 or 5 contracts, I'm going to be looking for $300 to $400. If I'm trading 1 contract, I'm looking for 100. If I'm trading 2, I'm looking for 2, so forth and so forth. But with that being said, I think I'm going to finish out the week here, passing more evaluations and trading for a 5-point take profit. And just at least until the dust settles this week, I think that's going to suit me a little bit better here. It's going to allow me to just take 1 or 2 trades, especially in the funded accounts, and then just kind of close those down and then get over to the evaluations. Hope this video helps you guys. Hope this recap helps you guys. Again, make sure to like, comment, and subscribe, and I'll see you guys all in the next video.